Welcome back everyone to another episode on stocks review. Today we're going to looking at Shaw's Technologies Group, or called the SHLS. So without further ado, let's get right into it. So over here you can observe this company is quite new. It's just that the trend of this company stock price is in a very decreasing form, especially when you can observe from the trend of 200 and 150 EMA showing a very strong decreasing downtrends. And this is, as you can see from the drawings and so on and so forth, you can actually observe that I actually bought this company, and this is one of my earliest company that I bought when I started investing, and I'm still holding on to it because it's very not much of that value. It's just ranging at least a top at $500. So I'm just gonna put it until it actually breaks even or perhaps turn into a profit. So I actually bought it around the 12.50 USD. So right now it's actually trading at $7. So in a very decreasing trend. But in the recent reaction, we can actually saw a slightly pullback over the downtrends, and maybe perhaps we're likely to see it to go back up to the 150 EMA, and perhaps for me to close at a lower loss. However, it does not really cost a lot. And without further ado, let's get right into the financial status. So over here we have Shoal Technologies revenue, and from the charts above, we can actually obtain the conclusion whereby they also have a very decent in terms of their increasing sales. However, for the starting year of 2024, we can actually observe a decreasing of their year-on-year quarterly growth, and however it starts to also show a growing back ability. However, it's just not that achieving high value or high revenue as mentioned in the 2023. As for their net income, you can actually observe a very low predictability, and from the value of this net income, although the revenue is increasing, the net income does not increasing and does not show that high predictability, also indicating that the profitability of this company is very low, and the ability of it to generate cash flow is also will be low. And so for the free cash flow over here, you can kind of expect that, hey, this value is going to be in the decreasing form. But surprisingly to me as well, the annual value of the free cash flow is actually in a form of increasing. So this is also showing the ability of the company to actually provide free cash flow despite having high revenue but very unpredictable and perhaps lower net income. The company still holds a large amount of free cash flow. So over here we'll be looking at what this company actually do is that it's actually a leading provider in terms of their electrical balance of systems called the EBOS solution for their solar energy projects. So it's actually a solar or green energy company related, and they encompass all the components necessary to carry the current electricity produced by the solar panels to an inverter and ultimately to the power grid. So this company's missions critical products that have a high consequence of failure, including lost revenue, equipment damage, fire damage, and also may include death as well as a lot of dangers. For their stream of income, basically what they do is they sell the electrical balance, which is the EBOS products, manage the electrical flow from solar panels to the grids. They have plug and play cabling and cabinets, which is a prefabricated solutions that simplify the installations. They have battery energy storage solutions, which is a EBOS plus this storage projections, which were increasingly important with the growth of the renewable energy. Have wireless performance monitoring, as well as service in terms of custom solutions, engineering supports, installations. They also have a lot of project sales. And in terms of their strengths and weaknesses, they're actually in a market leader in EBOS, which is providing the electrical balance systems to transfer from solar panel to the grids. They have robust product portfolio, offers a comprehensive range of products including solar trackers, interconnection system. So basically they have a very diversified revenue in terms of this green energy sector. They have technological innovations, demonstrated a strong focus on research and development, leading investments such as smart interconnect system and next generation solar junction box. As for their weaknesses, it has very limited geographic diversification because 95% of Shoal's revenue is derived from the North American market. So this can be one of the blockage whereby it's a limitations to increase the market cap of this company. And if this company were to expand its business model to more states, to entire US market, or even to the global, it can actually increase a better and provide a better profits in terms of green energy sectors. This company is very high dependency on solar market dynamics, and 92% of its total revenue coming from solar infrastructure projects is highly sensitive and fluctuates based on the solar market itself. So basically, this company does green energy, solar panels, they have the EBO systems, whereby they provide in terms of infrastructures, more in towards infrastructures on solar energy. And the companies are actually very reliant on this solar panel productions, and this company is actually just for north side of the American, and this is one of the limitations for its market cap. If it were to have higher expansions to the global, it might be able to generate more cash flow as well as profits from what they are doing. So over here we have the balance sheets, whereby the net cash is actually in a negative form, so sort of like indicating they have more debts than cash. But in terms of their trends over here, you can see that the decreasing form of negative net cash, so they are starting to compile more cash and starts to decrease their debts. And as for the ratios, we can observe the debt to equity ratio is significantly lower than 1, also lower than 0.5. As for the ROE, is actually at a very low value of 3.7%, and it has been decreasing dramatically from 97%, and it's just showing the ability of this company to have decreased. And also for the ROIC, it's also in a similar form of decreasing ROIC, as well as with its value lower than 15%. So lastly, we'll be looking at their economic mode score, and over here we obtain a moderate mode for this company, and also you can actually obtain others analysis. For example, for their mode score of financial strength rate is at 6, for Guru Focus mode score at 4, so indicating a very narrow mode. And for Morningstar, they actually assign no mode because of its weak business model. So overall, you can ask, why is this company so bad and I still want to buy it? So this is actually one of those companies whereby they are able to provide a great in terms of revenue, but in terms of capital expenditure, or maybe have high debts and needs to pay the interest rate, which can actually lower their profitability. This company is actually one of those whereby, hey, the financial status is not that beautiful, the economic mode score is definitely at moderate to narrow level, it's not that wide. So why is the reason that I bought? So as I mentioned, this is one of the stocks that I bought early time, and I'm actually in the form whereby I want to trade it, and things happen, drops, I cannot stop out, and I just leave it until I make profits or even break even from this company. So as a similar lessons as I mentioned in all my previous video, if you are in a trading form, be sure to stop out as soon as possible before the losses starts getting bigger, and your capitals will be locked for those periods of waiting just for the company to break even or make slight profits. So it's better for you to put those capitals with small losses into better investments and let it grow again. And for these stocks, for summary, is that the financial status is I wouldn't say very bad, but at least it's not in the criteria of being indicating it as a high quality company because of low predictability, as well as indicating the low profitability of this company with very decreasing free cash flow, as well as unreliable for the ROE and ROIC value. And lastly, one of the reasons why I would not recommend this stock is because, and me personally myself, I want to get out of this investment as well because of the narrow mode of this company. So in the long run, this company will still generate a decent amount of profits and free cash flow. However, if you want to grow your portfolio, this might not be one of those investment tools to hold in your portfolio. But of course, before making any decisions, make sure to do your own due diligence before stepping in or making any money decisions. I hope this video helps you. If you are interested into this company, you can look further into it and starts to showing some reactions. You can go and study the reason behind these reactions and their possible future values in the coming futures or quarters. So I hope this video helps you, and if you'd like to support me, you can click the thumbs up, subscribe to my channel, share this video, and I'll see you on the next review. Goodbye.